Hello, everyone. Good morning. Good morning. Good morning. Good morning. Let me welcome us to our exciting morning market review. My name is Emmanuel, reaching from the beautiful city of Port Harcourt. So once again, before joining us for the first time, this is our morning market review known as the MMRO. So we do this every trading day, Monday through Friday, one solid hour of market analysis, where we look at what the market is doing for us in order to give you tips and tricks on how you can navigate the market profitably. So guys, let's do a little sound check here. Sound check, sound check, sound check. And let me know you can hear me. You can get to the comment section. You can drop a comment there for me. Let me know if you can hear me. Because I'm feeling that you can hear me. But let's confirm that before we start. Okay. I've not seen anyone. So we have just few numbers in the room right now. Let's get more persons in. Let's open the floodgate for more persons to come in, guys. Okay, Mr. Carlo, thank you very much for that. So you can hear me. So quickly, I think it's already up to 8. This is 8:09 by my time, so I'll just start right now so that we can cover a lot of things. Okay. So I'll start by sharing my screen with you guys. But the way we normally do is, as our customers, we try to go through fundamentals, look at the fundamentals we're expecting. Then from there, we can now move over to technicals. So fundamentals is looking at the news, right? Trying to make a meaning out of the news, the global news that's happening all over the world, from Europe to North America, to the US, to everywhere, trying to look at how it's going to affect their domestic currency. Remember, it is the domestic currencies of these major economies that we trade. So when this news break out, I mean, major news that can affect their economy, their purchasing power. So all of that. So you get that now. So let's do it right now. So I'll share my screen so that we can look at fundamentals. So there are several websites we use for fundamentals. Hold on a bit. Okay, I can see you. Yes, I'm not really getting your name, but I think you responded, Mr. Patience. Patience also responded. Thank you very much. I really appreciate your response. So let me share my screen real quick now. So guys, please check. I've been able to share my screen. I went straight to Forest Factory. So there are several websites you can check for fundamentals, right? Several websites. Okay, so because of I have enough time now, I can show you those ones. So you can check for fundamentals on excuse me, you can check for fundamentals on investing.com, right? www.investing. Okay, hold on a bit. www.investing.com. I don't know whether some of you have actually explored this particular website before, but let me take you there. So this is investing.com. So investing.com seems to be quite bigger or has more news, right? And macroeconomic indicators and data, even cuts across more markets than Forest Factory, right? So this is investing.com. So you can equally use tradingeconomics.com. So you can equally use tradingeconomics.com. So those of you that want to maybe write it down, you're hearing it for the first time, you can do that. So you can use tradingeconomics.com. So Forex Factory, tradingeconomics.com. You can use realtors.com, my FS book, Bloomberg, CNN. What about Trading Star? I love Trading Star, right? Trading Star, Trading Star. That one has a commitment of traders data there, right? That's commitment of traders. So commitment of traders are even a different thing altogether. Trading Star, right? So maybe on a more different date, I can go through all of these on maybe on an advanced class. But for today, let's just look at what we have so that because we have just 1 hour. So I'll go back to Forest Factory. So this is Forest Factory. So on Forest Factory, if you just open this website, you may be seeing news for only 1 day, right? News for that particular day, you open it. But if you click on this word called calendar, I'm sure you can see this word called calendar up here, right? I've been able to zoom in. So if you click on calendar, it brings up a calendar, automatically shows you the news activity for a particular week. So we are looking at this week, right? This week happens to be the 3rd week of the month of September, right? Third week, third week. So just now we're already in 3rd week. Wow. So guys, so what we normally look at for is the impact of the news, right? The impact. Some of us are already familiar with this, right? So this is the date the news will happen, right? This is the time of the day. This is the currency the news will affect. And of course, from here, you can set some kind of reminder of the news, right? This is the currency the news will affect. And of course, this is the impact. So impact is the volatility of the news. I've been able to zoom this very well so that you can get value and see very well. Those for those for using phones, right? So after the impact, you get to see the caption of the news. The caption. Please, can you guys still hear me? Are you guys still following me? So you get to see the caption of the news. By caption, I mean the news headline, right? So what the news is about. So, but let's stay a little bit on the impact. Impact is actually the volatility. So it measures how significant is the news or how significant will the impact be. Hey, wait a minute. Let's not use impact to explain impact. So it measures significantly, it measures how significant the move, right, would be, or if you like, the volatility. So we can use the word volatility to explain impact, right? So it actually measures, okay, hold on a bit. So, okay, let's continue. So it measures how significant the move will be or the volatility will be. So if you're talking about significant, then of course, this color stand for this what color is this now? We call it silver, right? Or even ash color. It stands for bank holiday, of course. Then of course, yellow stand for low impact. Then brown stand for medium impact. So I'm trying to explain all of this because we have newbies always joining us. Okay, new clients. For those of you old already, okay, so just follow through also. But for this are very important for the newbies, those of us joining us for the first time. So this is actually, and of course, we always have newbies joining us. Okay, newbies joining us. So this is actually Monday, and this is Tuesday, passed already. So on Tuesday we saw CPI data from Canada, right? So actually our attention and focus is usually on the high impact news. Otherwise, the high volatility news. Otherwise, the one that can shake the market or move the market. Of course, when you know when this market moves, it moves people forward. It moves people forward. When I say it moves people forward, I mean it moves people forward financially. So I hope it has been moving you forward financially. All right. I understand that. So then of course Wednesday yesterday we got CPI also from the UK there, right? CPI in the UK, in the United Okay, guys, we are back now. There was a network issue there, so I was trying to get back to join. So, apologies for that. Apologies for that. But I think we can continue right now. So the rest of us, please check. The problem wasn't that you cannot hear me. I was actually disconnected. Okay. So, but I'm back right now because of network issue. So please check whether you can hear me now. So let's continue. I'll share my screen again. So we've lost some time, so I'll just move very fast right now. Okay, so I believe you can see my forest factory here. So yesterday we had the yesterday Wednesday, right? Guys, are you guys still with me? Let me just see whether you can hear me. So it's now loud and clear. Okay, fine. So I've shared my screen. Okay. So yesterday, Wednesday, we got something very interesting, right? We got the federal funds rate, right, from the US, right? We got the federal funds rate, and of course, that happened by 7 p.m., right? I hope you were all aware. One of the job of a trader is to keep in mind the fundamentals, right? Or even set reminders about the fundamentals. Why? The fundamentals are the major movers of the market. So technical actually align and is priced into what fundamental is saying. I say price in, price in. That means follows through what the fundamental is saying. So fundamental is a bigger picture, right? Fundamental is a bigger picture. Fundamental is like trading is like fundamental and technical analysis is like a father and a son, right? A father and a son. The kind of environment the son grows up in depends on the father, So if the father is transferred from Port Harcourt to Kano, you notice the son will be growing up in Kano, right? So if the father is transferred again from Kano to the west, say somewhere in Ondo or even in Lagos, you notice that son now will start growing up in Lagos, for example. So the son is technical analysis, and of course the father is the fundamental. So you understand that example, right? So it simply means the main movers of the market are the fundamentals. So you don't want to ignore the father. You don't want to ignore the father, or you don't want to ignore fundamentals. So for yesterday, we saw federal funds rate. Federal funds rate are their major interest rate decision there in the US, right? By the Federal Reserve, otherwise known as the Fed, right? So what they do is it's just a body of central bankers, right, that meet to decide the rates, the interest rates that the country will run on. Okay, that alone affect a lot of things. So what they do is they either hold the rate, they cut the rate, or they even increase or raise the rate. So if they raise the rate, you'll be expecting more strength into the dollar, right? So, but if they hold the rate, right, seeing that the economy is stable, so that's a way of passing information to the general public that, hey, we are comfortable with what we have right now. That's holding the rate, okay? So that also can strengthen the dollar. Okay, so exactly that was exactly what happened yesterday, and of course it was followed through by some non-data news. So I called it non-data news, meaning that it doesn't come with data. So we have FOMC economic projections by that same time. FOMC statement. FOMC means Federal Open Market Committee, right? So that's the committee that actually are saddled with the responsibility of market operation, open market operation, interest rate decision, and all of that. So, Federal Open Market Committee economic projection, that one is just a speech, right? A speech or a press conference expecting data. FOMC statements, no data. FOMC press conference, no data. Okay, no data. So all of these are just medium to explain where these FOMC members get to engage the general public in a press conference and all of that, and statement to explain why they actually held the rate to be the same. So the forecast is actually 4.25%, and they actually hold it, right? They actually maintain the forecast forecast, market expect that, right? But the previous is 4%, right? 4, right? So that means it a little bit, right? It actually came, but the forecast in 5, and they actually maintain it to be 4.25. But if you look at it compared with the previous, it was actually it reduced by this particular percentage, as you can see here. So guys, that alone affected their domestic currency as we saw yesterday, right? So for example, Euro USD had to maybe achieve before it dropped. And of course, I was expecting to achieve that milestone. Let's look at the chart right now. So all of this is actually yesterday. Let's talk about today before we switch out to the chart. So for today, Wednesday, we'll be expecting the same thing happening in the UK, right? So they call their own monetary policy report, and of course by the MPC. So the equivalent of the FOMC is the MPC, right? Monetary Policy Committee, but in the US is the Federal Open Market Committee. Okay, excuse me. So theirs is the official bank rate, right? Official bank rate. So 9 different persons will be voting, right, in the house. 9 different persons, so they will vote. So they will vote to either hold the rate, increase the rate, or even slash the rate, all of that. So we're expecting that by what time now? By 12 p.m. By 12 p.m. So by 12 p.m., guys, we'll be expecting that particular news. Okay, so guys, by 12 p.m. you'll be expecting a lot of movement, a lot of volatility, right? So guess what? If they should increase the rate, it simply means there will be some kind of strength infused into the pound, right? So if they should cut the rate, it will simply mean that the pound lose some kind of rate as long swing. It all depends on what the market down in cement. Uh, just okay. So this is Fed from the Fed, right? The interest rate from the US. So we got a spike upward. If you notice, it actually achieved a milestone. It touched 1.19. All right, 1.19 happens to be the highest price for the year. You'll not believe it. 1.19 is the highest price for the year. So let's look at it. So this is the beginning of the year. January, this is the beginning of the year. So from beginning of the year till now, that 1.19 happens to be the highest price. So the highest price before that time was actually, it actually happened in June, right? June. So June, am I correct? Yes. January, February, March, April. Okay. So in June, we saw the market giving us the highest price around 1.18. So that's what I mean by achieving that milestone, right? So it actually achieved a milestone by touching 1.19. So that happens now. You see, it simply means it struggled to take out this high, right? So it struggled to take out this high. It actually wanted to take out this high because taking out this high simply means the momentum is strongly going up, and it achieved that, right? It's achieved that before it fell back. So for some persons, I'm sure that move yesterday happened in both directions, right? Up and down. Let's look at 30 minutes time. So see what I mean. It went up and then it came down, right? So if you have your stop loss in place, and of course, and your take profit, so one of this move will actually affect your trade, either the stop loss or the take profit. All right. But if there is no stop loss, no take profit, you can just wait. If it gets to your direction, you take your profit and then you're out of the market because it's money you want to make. But then you saw the way it moved up to clear this high very well, achieve this milestone and say, hey, I have achieved it. They started coming down. But guess what? That's a sign of momentum. That's a sign of momentum. So if you watch carefully, this high, this, if you watch carefully, this high happens to be higher than this high. And of course, this high also is higher than all of the highs for the year, all of the highs for the year, all of the highs for the year. So this high becomes our highest high for this year. That simply means this market is strongly on an upward momentum. So that's the meaning of it. So it simply means if the market is strongly on an upward momentum, who is seeing it as this that the momentum is going up? Who is seeing it like that? They are the big banks, right? The big players. So the big players are looking at Euro USD on a very strong upward momentum. So this is the kind of chart they'll be looking at. While you're looking at 15 minutes time frame, 5 minutes time frame. The big players are looking at the daily time frame, the weekly time frame, so see what they are looking at. So it is always very, very pertinent and important for you to also consider their perception of the market, right? Their perception of the market. So because they are the big players, right? They are the big money, just like we always say, the big money controls the market, right? Controls the market, control the major moves of the market. So it means you want to take trade following the big money. So in every market you are trading, make sure you look at what the big money is doing. Did I say big market? The big money. So now that you understand what the big money is doing, you the small money, I mean is retail traders, right? Hope you understand that. So the small money should actually position himself to follow up that same direction. Please, are we following? So the small money should position himself to follow. Mr. Ekpem, you said fundamental speaks, then technical obey and follow. Okay, I like that one. It shows that you really understand what we're doing. Fundamental speaks and technical follows. You are saying you cannot hear me. I believe it's not now, it's 10 minutes ago, but right now you can hear me. So now that we have established what the big money is doing, now we'll now try to look at how can we copy that move, right? How can we copy that move? So one of the challenge is that the big money have a lot of elasticity, right? But the small money doesn't have elasticity. I mean, if the market is going against the big money, the big money have a lot of money to hold, right? To hold the trade, to hold the market. So I'm already seeing some momentum here, and we are trading above the opening price, right? We are trading above the opening price of the day. So this is strong for an upward trend, right? Of course, the big one is seeing upward trend, right? So I would like to enter a buy. I would like to enter a buy. Excuse me. So if not for any reason, this particular trade is in line with the big money, right? And of course, intraday intraday reasoning. There's something called intraday reasoning. That means reasoning. Your reasoning in terms of intraday. The candlesticks are all trading above my 50 period moving average, my 21 period moving average. Then of course, the big money is looking at an upward trend, right? The only difference between me and the big money is that they have a lot of elasticity, right? Me, I have a very small close stop loss, but they have a lot of elasticity. So I would like to put my stop loss maybe just below my 50 period moving average so that it's not be too big. Then I'll be targeting this high. Man, if the market can, of course, the market can achieve this high because we have seen momentum already. The market can achieve that high. So, guys, that's for Euro USD. Now, you know the GP USD have pretty much the same kind of movement, right? Pretty much the same kind of movement. So let's look at daily time frame. They are all the same kind of. So on the daily time frame, let's do that same analysis we did on Euro USD here. Okay, this is January, guys. This is January, as you can see. So therefore, the highest price for GPUSD is actually 1.37. So the market has not I've not taken out that high, but you can guess, right? You can guess what will happen. It means because Euro USD and GP USD, they are pretty much very similar in their movement, right? They are very similar in their movement. It simply means they both almost do the same thing. So Euro USD has achieved its own, right? So it simply means that GP USD may likely follow. GP USD may likely follow. Follow what? To smash the all-time high. So the all-time high for GP USD is actually 1.37, right? 1.37. 1.37. So GP USD may be going there. That simply means that the big money, take note again, that same statement we made on Euro USD. Profound statement, right? Money making statement. The big money is looking at GPUSD also on an upward trend for the year, right? That's what they're looking at, upward trend, upward trend. So that means they have been buying, they have been buying. So that's the first knowledge you have to get, right? The first knowledge you have to get is that, hey, big money is looking at it on an upward trend. So what should I do? Let me likely follow what the big money is doing, right? What the big money is doing. So let's look at what the big money, let's follow to what the big money is doing. So therefore, you come down to a much lower time frame, and now you're not looking out for that same opportunity, right? That same opportunity. Now, of course, it's just looking like what we have on the Euro USD, right? Looking at what we have on Euro USD. So it would be the same reasons to buy, right? Or even wait for the market to retrace a little bit, right? So this is the first candlestick, second candlestick, third candlestick, all bullish, very strong bullish movement. But if you watch carefully, if that first Euro USD trade is an aggressive entry, right? Let's do a conservative entry here. Aggressive entry, conservative. I hope you understand what it means, aggressive and conservative. Aggressive entry means once the market is breaking through, you enter immediately, right? That means you aggressively enter, right? But conservative entry, look at this aggressive entry. See what I mean by aggressive entry? Eh? We just traded above this high, right? Without waiting for any little pullback or retracement, we enter. That's an aggressive entry, right? Now, but conservative entry means the market have broken this high, which is a sign of auto upward momentum. We call it market structure shift. So we have seen a shift, right? After that shift, right, we did not wait for any kind of retracement, right? Waiting for retracement means you wait until the market does something like this. Then before you buy, then when you buy, you'll be expecting the market to go up like this. She get here. I don't know what I spoke your language, right? There's a way they normally say, she get here. She get here. That means she you understand it. She gets here. Either I think that should be a Yoruba word. So this is an aggressive entry, right? But if you wait for a retracement on, let's say, GPUSD now, you instead of jumping in, you wait for a little retracement. You wait for a little retracement. So I've entered one aggressive, so I would like to enter this one conservative. Conservative means if the market retrace a little bit, because I've seen very strong push and it has broken structure, right? And after break of structure here, we'll be expecting little retracement. So that's the little retracement we call conservative entry, right? So the little retracement gives you a little discount, right? Who doesn't love discount? Everybody loves the discounts. So if market gives you a discount, and of course you want to buy, then of course this one becomes a conservative entry. So now that's for Euro USD and GP USD. So because of our time, I would like you to call any instrument you want us to look at right now. Then we'll quickly go there. So if you don't have anyone, then guys, wow, this is USD I would like to look at GPJPY, USD and of course Euro JPY. So those instruments, those JPY, they are very. In fact, I love those instruments. So on the daily time frame, let's see what this instrument looks like for us here. This is looking. So I asked you to drop instrument you want us to look at, and I'm seeing that the comment section is already bubbling, right? So let me remove this guy here. Where is the handle of okay? Looking quite difficult to remove. Object list. So let me remove this field. Delete. Has it gone? Beautiful. Instead of coming to waste my time. So so if you watch this instrument H4 time frame, right? We have been rocking this support, right? The market has been rocking this support, rocking this support, and it's a very wide range support, right? A very wide range support. So the market is rocking this support. So what you need to do is you look for opportunity to want to buy, and the market has presented that opportunity. So this is actually a spring, right? Beautiful spring. Spring means the leg that takes out all of the stop losses, right? So this powerful one leg you're seeing, right? This horse leg is actually a spring. Spring meaning that it actually went down very fast to clear all of these lows. Remember, traders seeing all of these lows. What do you think they will be doing? They will be accumulating their stop losses all year, right? You're the only one not seeing other people's stop losses. If not, the market sees all of the stop losses, right? So if you're the market, you see all of the stop losses, right? So remember, the broker is not the market. the market, the market is the market. So the market sees all of the stop losses, right? So this spring here, boom, is actually doing that. So it's called a spring. It's called a spring. So when you see that spring, it tells you, hey, most likely the market will want to go to the opposite direction because the market would like to clear everybody out. I mean, clear small money out because it not affect big money, right? So this analysis, this strategy is for retail trader and analysis, right? So it does that spring tune before it goes to the other direction. So it simply means so look out for opportunities to want to buy, right? To look out for opportunities to buy. Look out for opportunity to buy. An opportunity to buy is actually beautiful. It's already presented to us, but since you are seeing a red candlestick running downward very, very fierce and strong, it's not advisable to catch a falling knife, right? So you don't catch a falling knife, you allow it to fall completely first. So assembly means so you don't buy immediately, right? So you wait until the market takes out this high or start building some bullish candlesticks. So that's for that. So let me leave the rest. We would like to look at GPJPY before looking at what you want. GPJPY has already gone far, man. God damn, I wanted to enter this thing since. But I wanted to do the analysis with you guys. So GPA JPY for today has already gone far. Of course, I like to buy this instrument, right? Because if you look at it on the much higher time frame, maybe daily time frame, is this daily time frame or even 4 hours time frame, you will see a very strong, powerful upward trend, right? Remember, whenever you go to the higher time frame to look at things, man, it means you are using the big money spectrum, right? So it simply means the way you are looking at the market, you're looking at the market as if you have millions of dollars in your account, right? Whenever you turn to a higher time frame, 4 hours, daily time frame, weekly time frame to look at the overall trend. Very important. It means the perspective you are stepping into, the realm, the civilization you are entering. I like that word is actually that of the big money. Okay, so you want to look at what the big money is in. And then that is the safest way to trade because it means you're always trading in line with the main trend. And of course, you can see the main trend for this year, right? Undoubtedly, the main trend for this year is a very strong upward movement. Simply means whenever the market gives you a discount, those are opportunities to want to enter. So quickly, 15 minutes time frame right now, man. This thing is strongly rushing upward. So remember, aggressive entry will be what? To jump in. What about conservative entry? Who can tell us what will conservative entry do? I'm waiting for you. Who can tell us what conservative entry will do for us? We all know what aggressive entry would do. What about conservative entry? Nobody. Now look here. Now we took one aggressive entry already, so let's not take another aggressive entry. Let's wait for a conservative entry. So conservative entry is So conservative entry is the market has already presented one for us. See one here, right? So when this market ran up this much, it retraced, right? If you notice, it retraced back to a fair value gap, right? So this is actually a fair value gap, right? If retraced back to a 15 minutes fair value gap, so you enter here, it moves up again. For a scalper, this is enough profit already. How many pips is that already? So the market has already done like 17 pips. $1 per pip, that's $17. $0.5 per pip, that's about maybe $8.5. Very manageable, right? Very manageable. If you make this money $8.5, and of course, it depends on your capital anyway. But if you have if you're trading with $10 per pip, man, that's about $170. Oh goodness, that's so beautiful, man. So by just waiting for a retracement before you enter, okay. So you notice we're already having a break of structure again, right? So the market have taken out this high already. So I would still want to do a conservative entry. I mean, wait for a little retracement before you enter. Okay. Now I think I am done with my own kind of instrument I like to analyze. So let me look at what you have. So you say gold, right? Gold, 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 gold. Who is saying gold? Mr. Alebode. Isedu Alebode. I hope I number more under your name. Well done, sir. So let me switch over to gold right now. Gold right now. Mr. Alebode said we should look at gold. So guys, I am on gold. I'm on gold. I'm on gold. I'm on gold. So this is good right now. Let's look at the spectrum of the big money spectrum. Of course, you understand what I mean, right? I mean the eyes of the big money, right? The eyes of Warren Buffett, right? You want to look at the market from the eyes of Warren Buffett, the eyes of George Soros. You know these names? George Soros. The guy has his name as George Soros, but he's not seen any sorrow, man. That guy is some big bucks, man. He's some billions and millions of dollars. So you can say very powerful, right? So we are looking, so this perspective is actually big money perspective, guys. Big money perspective, big money. So what can you deduce from here? Very strong upward movement. So that being said, let's drop down to 1 hour, right? For intraday reasoning, right? Intraday reasoning. So intraday reasoning simply means I would like to look for opportunities to buy. So I think now you're getting where that idea is coming from, right? I would like to look for opportunities to buy. Mr. Lebude, I'm analyzing your instruments. Opportunities to buy. Opportunity to buy is simply the market should give us some level of a discount. Discount means the market should trade downward. Okay. So the market had already done that, right? It traded downward here. It traded downward here again. But remember, anytime it trades downward, it should be able to trade below a low, right? It traded below this low. So trading below the lows is very important because those are where we have the opportunity, the real opportunity, because you'll be buying where the market is taking out stop losses. Don't loud it, keep it very quiet so that people don't hear it. So you'll be buying where the market is taking out stop losses. So other people's stop losses are actually your buy trade, man. So beautiful, so good, man, because that's what the market does, right? So the market moves from lows to lows, high to high. So the market has already done one, yeah. Right. So let's look at this particular level, guys. I don't know whether you're getting value from this analysis, but if you're not getting value, don't worry, don't worry, don't worry. It will soon get better. So if you look at what's happening right here, the market took out this low, right? Before it took out this low by this long leg, this long bullishness, right? That actually went down right here. Actually took out this low, which means there's a break of structure to the downside, right? Now, but then of course, the big money is looking at the upward movement from what I've showed you. Now you are seeing a very strong upward movement right here. And of course, what is happening right now is actually going to be a bullish engulfing, right? So by 2 hours, sorry, by 2 minutes time, it's just two minutes to 9. By 2 minutes time, I'm on 1 hour, 1 hour candlestick, right? By 2 minutes time, this candlestick will close. That becomes a bullish engulfing. So what does it mean? It means the market have seated comfortably on these local supports. And local support is very important, right? Whenever you want to buy the trend, right? So very important. So, and of course, we are seeing the market reaction. The market reaction is giving us a bullish engulfing, which simply means, hey, the market is holding, is holding, is holding. Call your friends, call your family members, holding. That means we should be expecting a very strong upward movement, right? But I would like to do a conservative entry, which means the market should do some little retracement back into this area, before I would like to buy, right? So therefore, you need to drop down to a much lower time frame to look for those areas where the market will need to do those retracements. So this is one area right here. So this is three candlestick pattern fair value gap, which is very powerful. So this is a fair value gap right here. So this is one area I would like to buy. Mr. Lebode, are you still with me? So this is one area I would like to buy because I don't want to do an aggressive entry. And if you buy here, guess what? Your stop loss will still be at this low, right? Your stop loss will still be at this low. So that gives you a very important area. So if you buy there, so guys, you're actually buying at this area, then of course your take profit will be targeting this high. Of course, if it achieves this high, it has achieved a good high. So let me even color it for you. So where you're actually buying should be guys. So yeah, okay, no need for that because of time. So you're actually buying here, then your take profit will be either this high, take profit one, of course, this other high becomes take profit two, right? Then your stop loss will be here. So for take profit one, you're having a 1:2 return on your investment, right? I mean, risk to return, right? I mean, the take profit is 2 times bigger than the stop loss. Then, of course, on take profit two, right? You're having something about 1:5, 1:5, 1:5. So, guys, I think let's rush to so that we can analyze other instruments. I've done that for Alebode. Alebode, I've done that for you. Then, of course, US 100, somebody just mentioned US 100 right now. So, Mr. Benga or Larinwaju, how are you now, man? Good to see you again. So, Mr. Benga said we should do gold, okay? Gold. What I say to one, I say to all. What I say to Alebode, I say to you too. I've done good for you. So, this is good. Now, let's look at your US 100. US 100, really quick right now. Very fast because time is telling us, hey, consider me. Now look at US 100. Let's look at it from the higher time frame perspective. Very strong upward movement going upward, right? Very strong. In fact, the thing they vex, the thing they go up. Very strong upward movement. So it simply means, hey, what's the higher time frame perspective? What do you think all those big players are looking at, right? They are looking at the market strongly going up, right? Okay, so still means me on my lower time frame, I'll be looking out for opportunities to buy. Sir, opportunities to buy. Hey, the market has presented one for today. Hey, I didn't catch this one. Oh. This is one opportunity to buy, right? This is one opportunity to buy. So the market got to this level and did a little retracement. Where did it retrace to? If you watch carefully, it actually retraced to this area, right? See where it retraced to. See where it stopped, actually. It stopped here, right? So this place is stopped is actually what we call a bullish order block, right? A bullish order block. It's called a bullish order block. Why is it called bullish order block? So bullish order block is actually formed by a down close candlestick. Then afterwards, we have a very big impulse to the upside. So this last candlestick here, this red candlestick is my down close candlestick. After that candlestick, you saw the way the market strongly moved upward, then retrace back to that level. So we call that a bullish order block. I don't know that you understand it though. Let me say it again. A bullish candle, sorry. A buy order block, right, is a place where buyers are actually accumulating their orders to buy. So it is formed by a down close candlestick. Down close candlestick is actually this bearish candlestick. So another word for bearish candlestick is down close, right? That means it closed down. Don't let the word confuse it. Close down. Up close is a bullish candlestick, close up. So this is a down close candlestick, right? A last down close candlestick before a very strong upward momentum, we call that where the order blocks started from. So this particular red candlestick, this one, layer. So this candlestick, this one is where it started from. So I'm going to just highlight it. So what do you highlight? You highlight the entire range of the candlestick, right? the range. So the range is actually from the highs to the low of the candlestick. So that becomes your order block. Then if you watch, the market actually went up, right? Came back to test it. So this actually a testing of the order block. So this actually a testing of the order block. So the market came back here. So if you watch carefully, the market came back here to test the order block, just straight into testing it. So after testing it, then you notice the market actually change direction right from testing the order block and start moving upward. Very strong movement upward, though, as you can see. Very strong movement upward. So that means the market have tested the order block. Now, by testing order block, it simply means, hey, we are going up. We are going up. We are going up. So it's simply, now let's look for opportunities to buy quickly. Opportunities. So since we have missed that one, but guess what? Order block, the market can test order block more than once, right? Hey, the market can test order block more than once, more than once, more than once. So let's see. Let's see here. The market can test order block more than once, more than once, more than once. So let's see. Okay. So it simply means if the market comes back here, right here, you know what to do. You know what to do. Don't loud it. Don't loud it. You are going to buy, right? Now, but then that area is very deep. Let's look for a more closer one. So the market is actually building a fair value gap right here. So this is another area. So you can just screenshot these. These are areas where you want to buy. The market is building a very beautiful fair value gap. So once this candlestick close, a retracement into this area, you buy. You buy. Want to buy. US 100 is going to the heavens. So guys, it's already past 9, guys. Let's look at the comment section again. I don't know whether you guys got some value from there. Mr. Kalu, yes, Mr. Kalu said GP USD and US 100. Okay, beautiful. I've done that for you, Mr. Kalu. He said GP USD and US 100. We've done that for you already. So guys, thank you very much. It's past 9. So my number is 09026264507. So I'll draw the curtain right here. Join us tomorrow again for another exciting section. Exciting section, guys. My name is Emmanuel Odogu. Now, the way we do this analysis is in such a way that you can be armed. You can be armed with the way we do the analysis such that you can look at any market of your choice, enter those markets, come out victorious by waiting for the market to do a little retracement, or you enter instantly to want to trade. Thank you very much, guys. See you on the next one. Bye for now.